Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Tesla report for Thursday, January 5th, 2023. Before we jump into the charts like this one, just want to encourage you to please click like if you would each and every time you watch the daily Tesla report. It helps us out with those algorithms that allow us to be found on YouTube when people search for Tesla and Apple analysis, also the daily Apple report. Subscribe to the Wicked Stocks YouTube channel. It'll provide you notification each and every time new content has been uploaded. And if you would, share the content with friends and colleagues. And so this is for the day itself. I'll start with the day and work my way out. I usually start with the big picture. But here today, if you've been following for the last few days, you know that we have dipped into a zone of what I'm going to call mid to longer term support. That it begins at 101.16 and ends at around 112.86 on the weekly chart. We've definitely slipped back into it for the second week in a row. This is bottom picking territory. It bottoms out at 101.16 and above which 146.08 is likely over the next 2 to 3 weeks and over the next 3 to 5 weeks. 169.74 long-term resistance in reach. In fact, I'm going to show the weekly charts now. This is the bottom picking zone. This has been a 3 to 5 week target that we realized in less than 3 weeks following a sell signal about 3 weeks ago below this structure here. This is what I'm calling long-term resistance, 161.63 to 169.74, and I think it's likely over the next 3 to 5 weeks. But we could also top out here once tested through the rest of Q1 and fall back to new lows within a matter of a month or two of doing so. As I've been saying, in terms of long-term investing in Tesla into later 23, I'm much more comfortable buying on strength with a settlement above 169.74 than anticipating a substantial recovery, I think, over the following quarter of trade and possibly into later year, rather than a bottom picking this zone. I'm talking investing. Now, for those of you who are near-term investors, you know, the 3 to 5 week, 1 to 2 month time horizon, certainly day traders, swing traders, and such, this is a good bottom picking territory for you folks, 101.16 to 112.86. And so that is the big picture. Let me get back to today, though. Not this one. Sorry. I'll show that in a moment. Back to today. So I've got 108.10. That is the low settlement price that was put out on Tuesday. And we did slip just below it on Wednesday, came off of it. I'm going to call that our downward pivot point today. You can see 108.10 here in the support and resistance area. If we break 108.10, not only anticipating 104.64, Tuesday's low, but quite possibly that 101.16 long-term channel bottom that I showed a moment ago, where once again, we can bottom out through January and above which the upper 160 is expected over the next 3 to 5 weeks. Upside today, you know, after a move low like this, a substantial move low, and so far Tuesday's low is the move low following a 1 year bear market essentially. Following that, you know, the inside day that oftentimes occurs is the top of that is an upward pivot point. So I'm going with 114.59, Wednesday's high, as our upward pivot point. If we push or open today above 114.59, we should today test 121.39. 129.39 under other circumstances, I would call a 2 or 3 star resistance, possibly able to contain buying well into next week, and we could fall off from there. That may happen, but given the fact that we tested that targeted mid to long-term support area in the 101.16 to 112.86 area on that weekly chart, I do think you need to be primed for the possibility of a settlement above 121.39 sooner than later. And I'm not trying to dissuade day traders or 3 to 5 day swing traders from selling 121.39, whether it's taking profits after having bottom picked this area over the last couple of days, or whether it's playing the short side as we move into next week. But just know that if we close above 121.39, that's a pretty classic buy signal as we move into next week. We should, within 2 weeks, possibly by the end of next week, test 146.08, and closing above 121.39, we could perhaps within 2 to 3 weeks, by the end of January, test this 169.74 area. 146.08, so if we close above 121.39, this is a 2 to 3 week target anyway, as I said at the opening, a 146. The 140s are a 2 to 3 week objective above 101.16, and if we close today above 121.39, we should reach this by the end of next week. The 140s are well illustrated here. Convergent trend lines coming off the highs, coming across these former lows from February, May. They converge January 10th next week. And so if we close today, for instance, above 121.39, we may actually reach that convergence at that time. 140.65 to 146.08, if tested over the next week or two, able to contain weekly buying pressures, and we could fall off from there for a week or so, but closing above 146.08, then we should, within a matter of a week, two at the most, push into this 160.163 to 169.74 region, where once again we can top out through the balance of Q1. Now, let's talk downside today. That if we settle today below 101.16, we could, I don't know by tomorrow, let's take a look at that chart. You tell me, we could, if we close today below 101.16, we could tomorrow, Friday, test this 83.82 steeply descending 2 to 3 week channel bottom. This is daily low material, but overall closing below 101.16 today or tomorrow, certainly at the end of the week, we have 75.26 as our next, I'm going to call this a 1 to 2 week target. With present volatility, it could be inside of a full week of trade, but we'll just leave it at 2 to 3 weeks. Closing below 101.16, 2 to 3 week target at 75.26. I've been mentioning how 75.26 is dropping at a pretty decent rate, and that over the next full week of trade will converge with, where are you? This prominent high, 64.59, that goes way back to the pre-COVID high of January of 2020. So you don't see 75.26 on this chart, but it is a steeply descending channel bottom that will converge with 64.59 over the next week or so of activity. And so, yeah, if we close today below 101.16, that sets us up for 83.82, possibly tomorrow. And assuming we then close the week Friday below 101.16, 75.26, and dropping daily expected within 2 to 3 weeks or less. And as I've been saying, closing below 101.16 at the end of the week, this market can, the descent, the angle of descent should continue. And under that scenario, by the end of February, we could fall all the way back into the lower 20s. So there's that. I'm not expecting the lower 20s. I'm not expecting the mid 60s. I'm not expecting the mid 70s unless we close below 101.16. That is my indicator. Until then, this is bottom picking territory for the upper 60s, 160s, 161 to 169, where we could top out through Q1 and fall off again. And once again, if over the coming weeks, last thing I'll say, we were to close back above this significant channel structure, 169.74 dropping weekly, we've got a good long-term low, probably through 23. That is all I've got, actually, for Thursday's Daily Tesla Report. Please click like if you haven't already, and subscribe. I'll be back tomorrow with Fridays.